here we have our famous AGQ. And have we ever traded it? We loved shorting it a long time ago when we said silver was going down. This is the bellwether. You don't need to trade nothing else but this one right here. And let me tell you, when it was a great short up here, however, it has great rallies. The rally was when we put that bottom in on the AGQ. Now here, I'm just going to take all the trend lines out. When we put that bottom in over here, you had a rally up above, a gap up above that 200-day moving average, MMTs. And what that did right then and there, as Ken Flagg will tell you, that's when this bottom here was confirmed. And daily simple moving averages are used by the public, but listen, MMT, by the time they get triggered in it, it's always going to be way above the price, and you're always going to be wholesale. So when this had the rally with the double rising 200-day simple moving average, here's one, here's number two, but look at Ken Flagg. Notice down here where the 200-day moving average was, that was at 164.88, Ken. And you can take a look over here that we mathematically ascended in value to 167.39. And what did that mean, Ken Flagg? It meant that this double bottom was going to be where the breakout would happen because of the rising value in the 200-day simple moving average programmed those high frequency flash robots to start buying high frequency volume in AGQ in the bid and ask on an intraday level. So when you take a look at where it went here, it went to 167.97. The 200-day was rising slightly. The 10-day simple moving average is right there. That 100-day moving average, we sold through it. Now, Ken, we're going to put that neckline right here. Okay? And we're going to go back over here to where this gap sequence was at 189, and we're going to put that slightly below the 10-day. But we're going to have a mathematical ratio right about here. Set an alarm, falls to 196.50. Ken Flagg, falls to 196.50. Let's falls to 195.75. Let's falls to 195.10. Let's fall to 194. It would be 67 pennies, and 194.35 pennies. And ultimately, it would be 193.87 pennies. It sold down through the 100-day moving average, but let me tell you something, what's bullish about it, once the volatility, remember, volatility is volatility, it's how these things are going to respond once the price gets there at volatility, right, Ken? So let's blow up the breakout. Let's reversal through the 100-day moving average. The neckline is important. The close was 204. The bid and ask is getting down there into the 198 area. Here, I can pull it up right here. See? 99,000 shares, 204.33. It's a continuation gap down from yesterday's selling closing price. That's a continuation. And what we're going to look at here is how overbought we were. So let's do that. When we were right here, we were at about 89% DS. That's standard. But now, with the pullback, we've dropped to 84.12. And what does that mean? It means that it's weak. It means that it's weak. Because it is. When the number declines and the percent DS, it's working its overbought capacity level off, but as it goes down to the lower support levels, they have a tendency of selling through those support levels. If there's very little short interest, they sell through. Okay? And what you're going to be looking at intraday is where it hits that bottom hook in our platform and where that 3-minute buy action bar comes in. Okay? Because what it did was that the high over here, Ken Flagg, the high on 718 was 216.225. I mean 223.22. That was on the 18th. Okay, that was the range. That was the high. The close of that day was 220.81, slightly, almost, you know, just do the math, almost 3 handles below it. On the 19th here, the reversal high flag was, it starts at 220 on the high yesterday and makes that low of 200.15 on the AGQ Ken flag. So we know where the previous day's intraday low was, and what we're going to be looking for in our platform is set alarms that no matter what, half delta, you know, slightly below half delta, 1 delta, slightly below 3/4 on the negative ratio side. And I'm going to conclude the AGQ trade at 6:24 a.m. 7/20/2011. We're about to open up.